Let's talk about NIO, the fundamentals of the company, the stock price, why it is currently a bit lackluster compared to competitors, what might be the reasons behind it, and why I actually think that based on this comparison, NIO is the most interesting investment opportunity there. So let's go in. So let's start with a one-year chart, which clearly shows that Tesla is currently in a stage of overperforming the competitors like XPeng, Li Auto, and NIO. If we go on an even shorter time span, you would see that Li Auto, XPeng, as well as Tesla are seemingly in sync here and have performed quite well during the last 6 months in comparison to NIO. But all of this changes relatively quickly if we zoom out a little bit more, like in September last year, when NIO still traded at around $20 a share and then had this huge run basically coming into 2021. And as I am also a Tesla investor, one could also make the point that Tesla has just now actually catched up or actually overexceeded NIO's gains from the last couple of months. And so has been also in the waiting game here. If you were solely a Tesla investor and only watching what NIO has been doing, they would frankly have kind of the same feeling towards Tesla stock than we have now towards NIO in comparison to the competitors. Now this was just the chart performance, but also let's look at the fundamentals of the valuation, where Tesla is leading by a far leap now with more than 1 trillion in market cap invested in Tesla, and NIO is now below 60 billion, XPeng at 40 billion, and Li Auto around 30 billion, and Rivian close to 100, and Lucid at 78 billion market cap. So I think it's also important to note that some retail investors out there are still watching the share price, which is not as relevant as the market capitalization. So NIO is still fairly high market capitalization here in comparison to XPeng and Li Auto, not so much to those new players yet. And let's see also now how this market capitalization is actually comparing to the fundamentals, meaning like the revenues and the sales that the business is doing. Because this gives you a better perspective on how the market is pricing the stock relative to the fundamental business. And Tesla's market capitalization currently comes down to 23 times the annual sales, so roughly 45 billion. For NIO, this number is much smaller. It's only 11 times because NIO is close to making 6 billion this year, and XPeng is interestingly here valued at 22 times their price to sales. So quite similar to Tesla actually, while Li Auto, which again in my point of view is just more a hybrid than an EV company, is actually also valued higher here in terms of the sales that they're making in comparison to the market cap. And then we also have those kind of crazy companies like Rivian and Lucid, which, some of them don't even have sales, and the other ones are kind of currently priced at 17,000 times the current market cap to sales. I think I don't have to comment further on those two stocks. Of course, the markets are forward-looking, but relatively speaking, this seems to be a bit over-exaggerated here. So coming back to the key here, if NIO would be actually trading similarly to Tesla and XPeng, it would now be double the share price. And of course, this begs the question why Tesla is valued the way it is, and on top of that, why XPeng seems to catch up well with this kind of valuation here. So Tesla is obviously the valuation and industry leader here, setting the benchmark, and in my personal opinion as a Tesla investor, Tesla is mainly valued like this because it's not only a car company, it's also a software and an AI company, and this allows such kind of software similar revenue multiples that we usually see in software as a service businesses, based on what is Tesla doing on the technology part. Now coming back to NIO, if you're watching my channel, you know NIO has been struggling a little bit with the deliveries lately. They have reported quite solid financials recently, so not exceeding the expectations but also not missing it. So fundamentally everything pretty good, and what you see also that they are building the capacity, so they are investing in infrastructure in the factory, and so lots of groundwork currently being done in order for 2022 and what is in the books and plans. So while investors may stop on the brakes a little bit, after this huge run which I've shown, and on the long term this stock has been, as I mentioned here, overperforming also XPeng, Li Auto and any of those. Of course, still we see that it is fundamentally undervalued in comparison now to Tesla and XPeng on this pure price to sales metric. And also on the other hand, NIO has this huge potential on next year delivering their new platform on which the new cars like the ET7 will be based, introducing new autonomous software and also their services related to that. Plus on top, of course, the capacity increase that I've been speaking about. And additionally, the potential that I see in the stock of NIO becoming far more than a car company and also tapping into new revenue streams that are unique to NIO because of its branding and positioning and its abilities in the area of retail, offline as well as online. So based on this very rough outline of the potential and the valuation of NIO, it seems like investors are currently looking more towards the sales side of things in terms of the delivery growth. And this seems to be currently mainly in the favor of XPeng here. But I think this is actually, from an investor's point of view, misleading, because I think XPeng will actually face more issues in the future of competing with Tesla in the mass market segment, in which NIO doesn't play a major role. I think NIO is positioned very well in the premium segment instead. And the problem for XPeng could become that they not manage to grow their top line revenue growth anymore. We need to consider here for once that Tesla is very well positioned also in China and aggressively growing. XPeng's branding possibly doesn't fit so well to Western consumers, so also the global growth is kind of limited. And then also coming back to the point that I usually stress, for every additional unit of growth that XPeng wants to deliver on the top line on revenue, they need to basically sell more units of cars than, for instance, NIO. Even on comparison to Tesla, also NIO needs to sell more cars in order to have an incremental higher revenue increase. And so if we see the price to sales, I think NIO sales are likely to increase higher in the future based on their unit economics, while XPeng is most likely limited at some point in time competing with Tesla. And at the point of time, possibly next year, when investors realize this, I expect that the multiple for XPeng is going to contract, whereas NIO should be here in favor again as the one who is actually getting the larger pie in terms of revenue share in the local market in China. So I do think this is currently a misallocation of capital in the markets by investors that are maybe more short-term oriented, and so this cycle currently fits them well for making short-term gains. But there may be actually additional reasons why NIO share price has been more depressed recently. One reason that I see quite often and has also been discussed here in our Patreon community is the topic about share dilution and the at-the-market offering. And I'll quickly walk you through this user post here by Kevin. After Q3 earnings, we know that NIO has already sold 1.2 billion in the markets and thereby selling 33 million shares. So the affecting selling price of those shares that have been already sold or offered are around $36.66 US. And if they would have sold every day since announced, that would roughly translate into 500,000 shares sold per day. And the outlook could be that, well, they could still raise up to 800 million of this announcement, and that would imply another 21 million shares to be sold and another 44 days at the exact same rate. So going into December, this may actually depress the share price. While I think it's debatable whether or not this offering came at the right point in time and the way it was executed in the lower 30s or mid 30s here, I do think that it possibly hasn't influenced the stock price too much. Maybe only on the sentiment, particularly the retail investor on the stock, unnecessarily, if you ask me, because I think dilution is to be expected in offerings as long as the company is growing. I've made various videos about that. But the sheer amount mentioned like here in this Patreon post with 500,000 shares sold per day is, I think, in a stock like NIO, which is very liquid and is trading millions of shares per day, maybe not really an influential part here. No question, on days when NIO is possibly selling larger chunks and pieces, that may actually have some influence on the stock price, but I wouldn't say that this is the reason for the sluggish share performance in the short term here. Another reason could be in terms of the macroeconomics and political side that has affected NIO. So of course the US-China relations, the topic around crackdowns, less investor confidence in Chinese stocks. But one could argue still, Xpeng is trading in sync here with Tesla currently, particularly on the price to sales multiple. So actually this shows that a Chinese company, even in current climate, can be similarly priced than a US company. But in the case in NIO, maybe there might be more specific reasons towards NIO, and NIO is also much more in the focus of retail investors, but also the hedge funds and the general public opinion, I would say. So Xpeng might be actually flying a little bit under the radar here. So one macro theme that I've heard that would be specific to NIO and not to Xpeng as much would be the notion that now with the crackdowns, luxury is not really on vogue anymore in China. And thereby investors are looking to sell off any stock that has been connotated with luxury in China. First of all, NIO is not luxury. NIO is a premium brand, more competing with the likes like BMW and Audi, not even so much with Porsche or Mercedes yet. Also, I would say this is really much an American take in my point of view. There is this kind of stereotypical thinking that China is living under a rock and it's all communism, and so you may not show off your wealth. And I can tell you, this is entirely different. In China, people who have lived on the ground know the important role of showing off brand, luxury and lifestyle, what this actually plays in China. And so while, yes, there has been a lower or more negative investor sentiment in some of these stocks, so if you look here, some luxury stocks exposed to China have actually been selling off after the news comes out, but now has actually recovered quite nicely in the past. So even if investors would have kind of internalized this, in my point of view, wrong take and false narrative here, then even the actual investment movements don't actually align with that. And luxury stocks have been actually also recovering lately, even if they have the exposure to China. Another similar argument going into this direction is that with the whole Evergrande saga, China's middle or wealthy class is actually losing purchasing power because of some assets being repriced in the property sector. But if you've watched my videos on the Evergrande saga and China's financial system here, you know my take that I think that this could rather be an opportunity for diversification in the investment area and also making the productivity shine more in other different industries. On top of that, I think it would actually be bullish news if Chinese become more cost conscious here, because that's exactly what NIO is delivering. Lower price than even the German car manufacturers, similar quality, much better functionality, a much better service at a more affordable rate because of battery as a service, for example, because of their software capabilities and so on. And so this would actually mean, if that is the case, which I'm not buying currently, that the Chinese consumer are not going out there and buying cars anymore, given the cultural significance of owning a house, owning a car. I think there may be saving on buying some luxury bags if that would be the case. But let's just assume, again, this scenario, then I think this would actually drive more consumers of not buying foreign anymore, but buying the locally produced and more affordable, at the same time still giving them the face, the luxury, and also a superior experience. So based on these macro themes, I do understand why particularly retail investors, but maybe even some fund managers that have no experience in China, have no stuff on the ground, have no analytics and research there, that they actually may buy into this hypothesis and opinion. But once again, I do think that this would, if that's the case, actually be a failed allocation of capital, because ultimately the fundamentals, I think, will come out differently. Another reason why the share price may be lackluster this year might be very simple, that people are possibly betting against NIO. And this may seem a little bit counterintuitive because the short float is only 5%, so that's not low, but it's also not really a lot. And of course, I also showed valuation, which is relatively low, again, against competition. And so the question would be, do we have any reason to believe this? And I think I found some evidence, or at least indicators here, that people are actually betting against NIO and shorting it, but maybe a little bit more secretive than you would expect. So this shows the shares failed to deliver. And to understand it, let's look into the understanding of failure to deliver and what it means. Whenever a trade is made, both parties in the transaction are contractually obligated to transfer either cash or assets before the settlement date. Subsequently, if the transaction is not settled, one side of the transaction has failed to deliver. And it goes on, failure to deliver is critical when discussing naked short selling. When naked short selling occurs, an individual agrees to sell the stock that neither they nor their associated brokers possess, and the individuals has no way to substantiate their access to such shares. The average individual is incapable of doing this kind of trade. However, an individual working as a proprietary trader for a trading firm and risking their own capital may be able, though it would be considered illegal to do so. Furthermore, fail to deliver transactions may be associated with margin trading and naked short selling if sufficient size short sell that fail to deliver create a phantom overhang in supply of the shares of a company and can artificially depress the price of that company's stock. Hence, the US Congress and the SEC have instituted procedures and penalties to be followed in the event of fail to deliver to receive transactions. Now, interestingly, what you can see here is that on October 13th, roughly 1.4 million shares have failed to deliver. And at a share price of $35, this would roughly translate into 50 million worth of NIO shares that have failed to deliver it here. Now, I'm not an expert on short selling and who could do this possibly and who can execute on this. And so I think this is some serious volume of shares failed to deliver. And well, it clearly shows that there is something going on. And if you look at the stock price movement after this possibly naked short selling of NIO, when this busted, the shares went up 25%, possibly because they had to buy shares in the open market in order to cover for the short. And so I wouldn't rule out that there are some parties like playing tricks here with NIO currently, holding it down and short selling and doing this in an illegal way here possibly, and also, well, that it's not noticed by the markets, where at the same point in time, it seems that in the dark pools or in the institutional trading, what you can see here is that the volume of shares being purchased, so not sold, is going up. So actually it seems that there are bulk sales and block trades happening between institutions, not in the open market, and institutions are actually more buying than selling. And while I cannot prove it yet, or it may be up to another video to do, it seems like that the downward trend here is currently just happening on the retail side, maybe making use of this lower sentiment, not really based on the fundamentals or at the really comparison to the competitors, but certainly happening currently as long as NIO share price is staying below this bigger downtrend. And so personally, I do see this as kind of a cyclical thing. It happens from time to time, especially also after a really big run that NIO had, of course, last year. Investors are looking from time to time for new opportunities because of the opportunity cost. More short-term momentum stocks like Rivian, like Lucid, going with the flow in US stocks right now, encouraging the trend in Tesla, for instance. And so this, of course, matters to somebody who needs the money right now, or needs short-term gains, or needs to know how to time the markets and play those short-term names. On the other hand, and that's just my personal style, and this is nowhere near investment advice, but I'm usually rather buying into undervalued stuff and trying to be anti-cyclical in terms of investing when the demand is low, and so having hopefully the larger gains over time, so meaning in phases like this trying to accumulate and kind of building a strength and a bigger position there. But of course that's not for everyone, but I hope this could explain a little bit more based on the fundamentals, on the markets, the trading, and gives you a perspective with where NIO's at. In my point of view, quite undervalued, particularly for what's to come in 2022. But up to you. Let me know in the comments what you think about this. Thank you guys for watching, and as always, see you in the next one.